Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, and it's December 21st. I hope you guys have a great day. We're approaching the long weekend here, so let's get started. We'll start with the weekly jobless claims. And last week we had 225,000 people apply for unemployment. Forecast was supposed to go up a little bit to 230, and it came up to 245,000. So we had about another additional 20,000 people apply for unemployment this last week, and obviously, still good numbers. It went up, but still overall good low numbers here that we're still seeing on the jobless claims here. A big one here. We got the GDP revision. This is the final revision each for the third quarter. We had it back in October, and that was the initial one, and one in November, and this will be the final one for the Q3. January, we'll see the first initial one for the fourth quarter, and we came in at 3.3, and forecast supposed to remain, and it came in a little bit under at 3.2. So overall, pretty good. I believe Q2 came in at 3.1. So far, we're looking at around 3% GDP this time around. So that's a pretty big drastic improvement from like the 2% range that we've been seeing for almost a decade there. Philly Fed. This is manufacturing in the Philadelphia area here. So November we had a 22.7% on their index level, and it went up 26.2. So we're seeing a little bit more manufacturing in the Philadelphia region, which is obviously good news. And last but not least, we got leading indicators. So October went up 1.2%. Forecast for November is supposed to go up 0.4, and it came in at expectations at 1.4%. So good. Some of them look a little not too good, but actually they're not that bad either. So they may not be great, but some of them aren't that bad. Like GDP came in a little bit under, but still above 3%. Still great. Weekly jobless claims went up 20,000, but still 245,000. Jobless claims is still not that bad either. Still relatively low in comparison to what we've seen in the past. So good overall, decent numbers here that we've seen. Stock market's up. Of course, stock market is taking off from the tax reform. If you haven't heard, the House passed it yesterday, so basically it's waiting for Donald Trump to sign off on, which we're expecting, and I believe that may be done today. And as good news, there's a lot of large corporations already announced that they're going to give out Christmas bonuses to their employees as a result of this new tax break here. So kudos to those companies who are going to go ahead and reward their employees, which is, and I'm sure they are well deserving of these benefits. So happy to see that, and hopefully keep the economy moving. I think this could be a good thing. They're saying bottom line, but this is going to help out the tax rate itself. But with the additional costs and if they're giving up better salaries and stuff like that, I think you're going to see people spending more money out there as well. And as a result, things will start clicking along even further in other industries as well, from retail and everything else. So overall, I think this could have a good overall effect in the economy. Now that this is going to be wrapping up here pretty soon, the tax reform, obviously investors will start looking at other catalysts to start looking at, and we'll have to kind of wait and see what that might be. We may not know a little bit more of that until next week or perhaps in January. When the investors start taking a little bit more time. So it'll be kind of interesting to see what they look to next as for their catalyst as to decisions of where the market's going and stuff. But meanwhile, let's take a look here at the bond market, see how that's doing. As you see, we've fallen pretty hard. We're down to levels that we haven't been to since October, the lows of October. This is the last time we hit this number down here. We're down about, I think it's 6. We're up a little bit, 3 basis points today, excuse me. So this is down, this is where we started. We were down even further a little bit, but we pulled back a little bit. So right now we're up about 3 basis points. So really no change in pricing from where we left off yesterday. Pricing's about the same. Hasn't been significant for any price changes. And then here's the, oops, sorry about that, wrong way. Here's the 10-year Treasury, and the Treasury's down about 1, so we're down about 2.49. We closed up at 2.5 yesterday, and now we're down to about 2.49. Again, long ways from that 200-year or 200-day moving average, which is what we needed to get more of a significant increase in our rates, and we may not get it with all the good news coming in here. Rates may, again, slowly rise upwards. So I don't know if we're going to start seeing those rates we got kind of so spoiled with in the past. But that's a good thing. That means people are making more money. People are doing much better in the stock market and the retirement and everything else. That's a good sign. So happy to see that. So that pretty much wraps things up. If you guys want to get more information throughout the day, just come over to Twitter. You can see me at Mike Bjork. I do post throughout the day over here, whether it's market close or different updates of the markets or different things like that. Feel free to stop by there. And I hope you guys enjoy the rest of your day. And if you guys are taking off early, hope you guys have a very Merry Christmas as well. Thanks for watching. We'll look forward to see you guys tomorrow, if not, worst case, Tuesday. Take care. Bye-bye.